What's up, everyone? It's Scotty with Money Investing. So welcome on board for a quick live stream. This is not going to be like super long. I want to do it for like maybe 25 to 30 minutes. Just give me a thumbs up if you guys can see me and hear me. And next week, of course, is going to be super important. That's why I wanted to go live, kind of get us ready for what's coming, because the markets, of course, have been nothing but painful since the start of 2021. So just give me a thumbs up. All right, perfect. You guys can see me and hear me. The audio video working good. I want to go over the earnings calendar very quickly, get your feedback, which companies you guys are most excited about, and of course then go over the Federal Reserve calendar as well, the economic calendar, and there's the FOMC meeting coming up next week as well, which is going to be super important as to what Jerome Powell has to say. So as always, if you enjoy this video, make sure also that you drop a like, right? So it gets this stream out to other people as well. So these are the earnings for next week. So we got a lot of stocks, a lot of tech earnings, a lot of value stocks, a lot of industrials, some airlines, some banking. So a lot of companies ready to report. So the ones that I'm really watching very closely, Microsoft, definitely the one on Tuesday after the markets close. Texas Instrument to some extent. I'm also interested in Verizon, American Express, Lockheed Martin, 3M, and Nextera Energy. Those are all going to be before the markets open on Tuesday. And we've also got Wednesday, very important day. We got Boeing, AT&T, Tesla, and Intel. All four companies, super excited to learn about what their growth was like, especially Tesla. We can expect a record quarter from the company after the record deliveries in Q4. So, I will do like an analysis leading up to the earnings, but we'll definitely break down what they actually announced after the earnings as well. And then we've also got ServiceNow, Lending Club, Xilinx. I will be interested in because of their potential merger and acquisition with AMD. So I own AMD, so that's going to be an important one for me as well to really understand how Xilinx is doing from an underlying business standpoint. Then Thursday, we've got some of the market leaders. We got Apple reporting, MasterCard, and Visa, three companies that I'm going to be watching. Robinhood a little bit. I do have plans of doing an actual fundamental analysis on the company on Robinhood, so maybe I will kind of look into that company as well in terms of revenue growth and earnings and whatnot. And then we've got Southwest, one of the companies that I also own as a recovery play, reporting earnings. My estimates need to be like, they need to get up to 75, 80 to as high as 90% of their pre-pandemic revenues from back in 2019. I would be very pleased if they actually get up to those levels. The balance sheet needs to improve and earnings also need to get better for the company. If they can actually do these things, then I'm super pleased, and I will continue to kind of double down on more Southwest shares. And then finally, Caterpillar, Chevron, some of the energy industrial companies reporting, along with Chipotle, kind of wrapping up the week on Friday before the markets open. So, what do you guys think for tomorrow? What is gonna be the day like for next week and tomorrow in general? What do you guys think? Are we gonna see green or red? I mean, so far, the markets are doing okay. We got the Nasdaq futures up close to 86 basis points, but this is just an indicator. I would definitely not trust the futures market right now because a lot of things change overnight. A lot of things change intraday. So it's really a good sort of estimate as to what and where the markets will open, but certainly doesn't give you the full story because a lot of things will change, over the course of next several hours before market open. So let's see. Yes, so Pinterest valuation extremely oversold. I agree. It's been selling off quite a bit. I think from future forward price to earnings price to sales standpoint, definitely trades at a very reasonable level. So let's see. Tom, are you going to sell everything? No, I'm not going to sell everything. If anything, I'm just getting ready to kind of buy more. So I'm sitting on roughly about 15% cash right now, something that we broke down for our private Patreon video as well. I kind of broke down my portfolio allocation, what are some of the stocks that I own and what the percentages are. So I'm a little bit over 31 stocks right now, and my plan is to, there's some new stocks that I'm watching as well. As the markets continue to sell off, there's definitely new companies that I feel like are coming down to very reasonable to low valuations. And then, of course, my existing ones that I want to buy more and kind of dollar cost average into. These are all, like most of them, you'll find that these are profitable companies with great fundamentals, with great balance sheets, excellent management. So there's very few I want to say like maybe 2 or maybe 3 pre-revenue companies. Well, actually there's 0 pre-revenue companies, and there's maybe 2 or 3 companies that are generating good revenues, good good fundamentals as well, but they're not profitable and the balance sheet is also so-so. So those are kind of like very, very small allocations, but majority of it is, in my view, strong fundamental companies, which I also have plans on buying more. So insight on PayPal, I've actually done a complete analysis on PayPal. I've done several videos on that company, so please make sure that you do check that out. It's like a complete detailed analysis. But anyway, so this is our January 2022 calendar. We've already gone through a pretty rough week with inflation and everything else. Powell's speech was back on January 11th. And of course, we had the CPI, we had the beige book, we had the crude oil inventories, we had the PPI numbers, we had the retail sales, import-export prices, all that stuff already is out. Starting next week and tomorrow, we've got the consumer confidence, which I don't expect this number to be super high because consumer confidence as a whole has been quite low, right? For the economic growth, for a recovery, for a potential fear on recession. So that's all is kind of putting pressure on consumer confidence. So I wouldn't be surprised if this number is not on par with the expectations. And then on Wednesday, we've got the big, big day. Not only do we have Tesla, Intel, some of those companies reporting earnings, but we also have the FOMC meeting. We've got the federal interest rate decision and Jerome Powell also giving a speech. By now, I fully expect for the markets to have given some sort of, for Jerome Powell to have caught attention of the markets by now. Nasdaq's down 15%, that's not a small move. S&P down about 8-9% from all-time highs, that is also not a small move, right? We're almost entering an official correction for the Dow and the S&P. The Nasdaq's almost already there. So it's definitely caught attention from Jerome Powell, so I don't know how he's going to tailor his speech. Obviously, the market is something that they don't and they shouldn't care about because their dual mandate is all about price stability, which is inflation and unemployment, making sure that people are employed and the wages are strong. So those are the two things that they're focused on. But at the same time, they can't ignore what the markets are doing because they are going to get the pressure from Congress. There is going to be some talks because, from Federal Reserve standpoint, they don't really care when crypto markets sell off because that's unregulated anyway. If the some of the smaller cap, mid cap stocks sell off, that's also not a big deal. But if the whole market starts to come down, and if FANG stocks come down, that catches the attention of the Fed right away because then we're talking about 401ks, we're talking retirement accounts, pension accounts. Every single account in the US is now starting to get hurt because the overall market is coming down. So all right, that's that. Let's just quickly go over some of the stocks here and break that down for you guys. Again, let me know if there's any stocks in particular you want me to go over, and I'm happy to kind of share my thoughts and kind of go over the technicals and fundamentals depending on how long this is going to be. Probably like maybe 20 minutes or so, but let's just do that. So let's take a look at Enphase. So what do I think about Enphase right now? So Enphase is a stock that I have traded in the past. I think I might have still have a position, a very small position in this, but it is a very, very sort of like a highly multiple stock, right? It's a high sort of multiple stock, and it's a rich company to begin with, trading at about 117 times earnings, 15 times sales, 56 times price to free cash flow. So I'd be very careful. It certainly is coming down to much better prices, more attractive prices. So $110 is going to be that support level to watch. And my 2 cents are going to be, don't just jump into any stock right now. There's a lot of earnings coming up. I personally am certainly going to wait for the earnings before I actually make a decision on whether I want a dollar cost average at these prices or not, right? It's because the earnings are going to be so very important to kind of really, shape up the direction, give us some more direction as to where we're headed, at least for the next couple of quarters. So I would wait for the earnings, see what the companies are reporting in terms of revenue and what they're guiding forward. So future guidance is going to be it's never been more important for any company to report future guidance because we've learned from our experience with Netflix, we've learned about our experience with other companies that you can have a perfect top line, bottom line hit, like you can actually come out with better numbers than expected. But if your future guidance is poor, and if your forward guidance is actually uncertain, that's enough for Wall Street to punish your stock, right? With Netflix down 22% was not because of what they reported, but because of what they were anticipating or expecting in the first quarter 22. So future guidance, so very important. I would definitely recommend kind of learning about the earnings first and what their future guidance is for any company that you're interested in, and then making a decision on whether you want to buy or sell or hold, whatever the decision is. So For end phase, they are expected to report, for March 1st. 110 is going to be that next support level to watch moving forward. So yes, so comment on Hood earnings and where we stand with its fundamentals. Yeah, so I have plans of doing actually a fundamental analysis, Ranjit, on Robinhood, and I will be kind of tying that in with the earnings that they announce next week as well. So expect a video towards like the next weekend after they report their earnings. So Mara has been selling off, obviously, without a doubt. I wouldn't be surprised if it does come around to $20 because Bitcoin obviously has had big breakdowns here. So it's just been trading inside this lower high and lower low pattern. So we're just consistently down, inside this downtrending channel. Now, there has been some speculation about Russia and, of course, Russia banning cryptos. I don't think it's a big deal because Russia in general, if you look at the grand scheme of things, it's not a big player in the crypto markets, at least what I've researched and whatnot, and they're not sort of like big enough for the trading volume for cryptos as well. Sure, it's a big catalyst that definitely has or adds some more pressure and fear for other jurisdictions, for other countries to actually start looking into cryptos and potentially even banning it, but Russia in itself is, in my view, not a big enough catalyst. Sure, it's got like a nice breakdown for Bitcoin and it's now trading at this lower low again. Resistance is going to be 37,500. Support next is at 30,000, which is very much possible as well, given the state of the market, given the market dynamics and how everyone is becoming more and more risk averse and doesn't want to take as much risk. Most investors right now are flocking towards safety. That's either cash, bonds, or dividend stocks, right? Those are the three categories where we're really seeing interest in, right? So oil and gas is doing well, utilities, defensive stocks, aerospace, those are the type of sectors that are doing well. And then away from stocks, believe it or not, people are moving towards cash and people are also moving towards bonds. So those are the, categories that investors are flocking to, which is a more risk averse, safer sort of market environment. So Bitcoin, 30,000 is very much possible. And for Mara, that's going to put us down roughly at $20. And I would consider to kind of dollar cost average, even if Bitcoin falls, because my thesis is on Bitcoin, not so much on Mara, but Mara is just a vehicle through which I'm able to trade Bitcoin's price action. All right, so let's see. Max, Caddy, I have a panic attack because of the markets, so I would definitely recommend some meditation. Again, this is away from the stock market, and if you're actually being serious, I would definitely recommend some meditation. Sam Harris, Waking Up, download that app. It's completely free. You can also do it on YouTube, and just take that stress away. And just know that this is something that happens pretty much all the time. I put out some stats in our Discord that a correction happens or has happened 37 times since 1950s in the S&P 500, 37 times. And all 37 corrections have been erased by a bull market rally. So 100% of the times, the corrections have been erased by a bull market rally. So so Claudia, I am still strong on Mara, and I will be buying. It has obviously been coming down because of Bitcoin, but again, I want you guys to reassess your risk tolerance. Right now, Mara is like less than 2% of my entire portfolio, right? So just because I can take that risk doesn't necessarily mean that you're on the same risk wavelength, right? For you, it might be different. So you need to kind of assess that risk for yourself and how much volatility you can handle. If it's not a lot, then you don't need to overexpose yourself with Mara. There's plenty of other stocks out there, right? Just because I'm okay with it doesn't mean that you are, right? All right, so let's take a look at Salesforce for Iggy. So CRM is definitely coming down as well. So $210 would be that first support level. I think I've done a complete fundamental analysis on this company as well. Valuation's still a little bit rich at 122 times earnings. Just under 9 times sales for a software company. That's actually very good. 9 times sales is good. 31 times price to free cash flow, also reasonable. Enterprise value to EBITDA at 40, a little bit on the high end. So price to earnings is the only thing that needs to come down. They can do that by two ways, either growing their earnings or coming down with the market cap. But $210 is going to be that support level to watch. And I would also, from a technical standpoint, definitely suggest that we wait and we let the selling pressure get exhausted first before we start the dollar cost average or start buying again. Because just the momentum in general, the price weakness has been very, very strong, right? There's been a lot of momentum to the downside and nothing really seems to matter right now as we discussed in our previous market update. So wait for exhaustion, wait for some, confirmation, wait for some support levels to get validated before you actually start the dollar cost average. Because right now, everything seems to be like a falling knife, right? Everything that you buy sells off even more. So there's no point in, just dollar cost averaging every couple dollars or every few percentage points. Let's just wait a little bit longer. Let's just wait for the exhaustion to happen and then you can slowly and steadily kind of build your confidence back. And that's the same for me as well. I'm just waiting and dollar cost averaging slowly, right? It's a slow process. I don't need to rush into anything. So for CRM, $210 is going to be that next support level. Let's take a look at Etsy, and then we'll talk about Tattooed Chef. So Etsy has been breaking down as well. So next support level I'd watch for Etsy is going to be roughly, it's a little bit tough, but right here, 115 is going to be that possible support. So previous resistance from July 2020, we broke out, we breached that level once again, but then we broke out, back tested that old resistance as a support before rallying even higher. So 154 is going to be that new sort of resistance. And the reason I don't have any of the moving averages right now, because most stocks are trading below moving averages, whether it's the 50 SMA, the 100, the 200, the 300, they are trading below those moving averages, which is in itself a very, very strong sort of downtrend, right? There's no confirmation, as I said, and the RSI and MACD are incredibly oversold right now. So Etsy 115 is going to be that next support level to watch. I think the valuation is a little bit on the high end at over 47 times earnings. And honestly, Etsy needs to be on that list of stocks that the video that I put out over the weekend, 22 stocks, it needs to be on that list. So there's going to be 23 stocks because Etsy, I've done a complete fundamental analysis on with the acquisitions that they've done over the past couple of years. I had a price target of over $300 per share. We got up to over $305, which is why we actually exited our position. And now it's coming back down to those levels where we can consider it once again because the upside is just that much higher and the valuation's coming down. So let's take a look at so NVIDIA and Tattooed Chef. So very quickly, NVIDIA coming down 229 at 230 is going to be that next support. We do have the 200 SMA on NVIDIA trading below that. So 200 SMA is going to be 220. So, $220 is going to be that level to watch. On a forward basis, right now this is on a trailing basis, definitely very, very high multiples. 25 times sales is actually not cheap at all. But I'm just going to be waiting for NVIDIA. I've been waiting for a long time for this to come down in the 200s or possibly even lower, and I don't mind kind of waiting a little bit longer. And now the market cap's come down to 584 billion. I mean, this was at some point a close to 900 billion, almost $1 trillion, and now it's come down to 584 billion. So, that's the markets, right? When you have certain targets, it almost feels like it's never going to hit it, but it almost, like, fair value always wins over the long term, right? So fair value and fundamentals almost always win over the long term. Let's take a look at Tattooed Chef here. So Tattooed Chef, unfortunately, now under $13, down a little bit over 3.5%. There has been previous levels from July of 2020 where we were trading at lows of 1261. Wow. So we were almost exactly at this support to the decimal right here. So if you take a look at this support here coming in from July of 2020, we were right at $12.61. That was the low for that day. And before that, and then, after that, of course, we rallied over 127%. So, this doesn't necessarily mean that we're going to see the buyers step in here or we're going to see some momentum back higher, but this is definitely noteworthy where we were literally at 1261 back in July 2021, and this is like a 2-year low for Tattooed Chef trading at that support. Now, before that, we don't quite have any of the technicals, so I think that's the only support level that I can really point out for Tattooed Chef. Now, with any other company, Tattooed Chef is also coming down to very, very low valuations. I mean, this, to some people, to some investors, this can be like a ridiculous price in terms of buying opportunities. For me, I'd be more interested in kind of their earnings. If they announce really good earnings and if they actually turn the corner towards profitability, then, why not? Maybe a small position in Tattooed Chef for like a plant-based need sort of food space, but really need the earnings to improve for the company and for them to like give us a more reasonable guidance and not really overshoot and then underperform. I think that's the worst sort of thing any company executives or any management can do, is kind of have these really, really crazy or ridiculous targets and then under deliver. Quite the opposite is amazing, right? When the company under forecast or undershoots and then over delivers, that's the best recipe for a stock price to like move higher, but not the opposite, right? The opposite is true for Tattooed Chef, where they have crazy targets and then they're under delivering right now. Peter, welcome on board. What's going on? All right, let's take a look at Matterport. Wait, no audio? Somebody just mentioned no audio. I just want to make sure that the audio is working. Just give me a thumbs up. Ollie, so we went over Enphase Energy earlier, so you can kind of scroll back and take a look at that analysis as well. Okay, perfect. Let's take a look at Matterport here, MTTR. So Matterport, just over $10 a share. Just $10 was actually the low on Friday. So, it's definitely got a lot of business fundamentals. Again, I've done a complete fundamental analysis on Matterport as well. And I really got to watch that. I'm sorry, you guys. I got to watch my video from Matterport. I'm pretty sure in that video, we passed on that investment because all the fundamentals itself, I think the share dilution was a big problem. I think the profitability was a problem. But that being said, as prices come down, the risk has definitely come down. A lot of these stocks have essentially quote unquote de-risked, right? Because the prices are just so down and suppressed at these levels that the further down they go, the better the deal becomes for these companies. So I would definitely take a look at Matterport. Without a doubt, I'll probably do an updated analysis on this company moving forward to kind of really understand if it's going to be a buying opportunity at close to $10 or not. But right now, there's not really much that I can go over. Technical wise, we're hitting a new all-time low, $10. This is going to be a support at 1045, 1050, like aligned with this sort of green line you guys see. And then fundamentally, I need to kind of do an updated analysis on that stock. So let's take a look at PayPal, ticker symbol PYPL. So PayPal is certainly breaking down from this bear flag. So we were consolidating sideways for a very long time for PayPal here. There was, lots of selling pressure here, consolidation, and then a breakdown even further. PayPal, I think, more than deserves the sell-off that we saw because the valuation was way too high. Price to sales were almost at 17. Same thing with Visa, same thing with MasterCard. Valuation got way too out of hand, and I think this is a very healthy pullback. Now, 140 is going to be that next support level. And again, the same concept applies with PayPal. As the price comes down, the risk is also coming down with it. And it's now starting to get de-risked, and the valuation is getting more and more attractive as the prices continue to fall. So 140 is going to be that next support level to watch right now. Phil, what's up? Welcome to have you on board. Thanks for joining. So yes, I will break down Robinhood, not a problem. I'll probably do like a dedicated video on that. Let's take a look at Facebook, and then we'll talk about yes, so Facebook and Shopify, let's just two companies go over. Facebook breaking down under $308, which we turned into a resistance, support level at $296. And I think Facebook also trades below all the moving averages. Yes, so we're trading below 50, we're trading below 100, we're trading below, we're trading below the 100, 200, and 300 SMA, which is a pretty big deal for any company without a doubt. So just want to make sure that, okay, so 100 is crossing below the 200 right now, it looks like. But that being said, they are pretty much in sort of like a very, very strong downtrend. If we're trading below moving averages, that in itself is a very strong downtrend. Because before that, you'll notice that was the March 2020 crash. And prior to that, we were nicely validating certain moving averages. Over here, we were validating the 100, the 200 over here. So that's a nice uptrend. And now the trend has completely shifted, which may take some time for us to reverse. But in the meantime, Facebook can certainly fall further down to 296. That's the level that I'm watching next at close to $300. But the fundamentals, remain unchanged and intact. The underlying business remains intact. So they're going to report not next week, but the week after, like the first week of February, I think, along with Amazon and Google and some of the other companies. But again, it's going to be super important for us to keep a close eye at the earnings. My price target stays put at close to over 700, but that's also 2026 years out, 2020. So yeah, year 2 and 2026. So I would consider to kind of dollar cost average at those levels. Yes, and the valuation is also very, very low for Facebook. I think the valuations definitely come down to very reasonable levels. Shopify. So Shopify has had a huge sell-off. I think 3 or 4 stocks that during our market updates, we kind of put them in the same bucket were Shopify, NVIDIA, Square, and then PayPal, and then AMD as well. Those are the 5 stocks that, are kind of like high growth. These are companies that you can put a label that are very, very strong, sort of promising tech, right? Promising tech, let's just put it that way. And they are also profitable with good management and fundamentals. The only problem with these were that they were trading at high valuations, right? So they're high growth, promising tech, trading at high valuations, the prices are coming down. That's the only thing that's changed. And that's pretty much across the board for many stocks. What has changed over the last 3 weeks? Nothing. Like none of the fundamentals have actually changed for any of these companies. The only thing that's actually changed are the prices. Prices are coming down, right? And we had a discussion. I had a discussion with a few of our members, and I basically mentioned that the markets are so forward looking, right? That's what the markets do. They try to price in 12 months, 16 months, 18 months out what is going to happen, not what's already happened, but what is going to happen in the future. That's why, because back in March 2020, you saw the markets drop 30% plus in 3 weeks, in just 3 weeks, right? And that wasn't even the day or the time when the cases peaked. The cases peaked way after that, right? The cases are still going up till today, right? So the markets priced all that in, that cases are going to peak at some point in the future and we're going to go into lockdowns, and we need to price all that in, and they dropped within 3 weeks, right? That's why, bull markets are staircases up and bear markets are like elevators down, because scariness and of course fear overrules with everything else. Like that's the predominant sort of decision maker for many folks in the market. So that's what we're doing. We're forward looking. The markets are pricing in interest rate hikes and a tightening cycle. But when that actually happens, because it's going to have a lagging effect, right? Interest rates going up is not necessarily going to drop valuations right away, because valuations are already going down. It's about the consumer spending. Is that going to slow down? Is money velocity going to start to slow down? Those are some questions that we need answers for. It sure is, and it should. Theoretically, it should, because interest rates going higher, consumer has less money to spend because borrowing costs is going higher. So it's going to have a lagging effect. But at that point, the markets should be in a much better place because we've already priced in for all that right now. That's what they're doing right now. So $880 is going to be that support right now for Shopify, down to $700 for the company. So this right here is going to be that next level. All right, so let's see. Amazon 3K this Friday. Yes, we're changing a target from 4K to 3K. So Amazon definitely has had a huge breakdown for the last couple of days. So definitely, coming down below $3,000. Next support is going to be 25.25. So this right here is going to be that next level to watch. And again, we're trading below the 50, we're trading below the 100, we're trading below the 200, 300 SMA. So the pattern is in a very strong downtrend, and that's true with many stocks in the market. We went over this earlier, and how if you take a look at this percentage of stocks above 200-day moving average, only 31%. Only 31%. 70% of the stocks, 69% of the stocks are trading below their 200-day moving average. And this is for the entire market, not just the NASDAQ or the S&P. So, that's like a very nice technical indicator in itself, that so many stocks are breaking down support levels from a technical perspective. Only 31% are still above those levels. All right, so a couple more we're going to go over. Let's take a look at Google. So ticker symbol GOOG, and then we'll talk about Visa. So Google 2575 is going to be that next support level right here that we need to watch very closely, all the way down to 2500. We are still trading above the 300 SMA on Google, so that's going to be another level to watch very closely if the markets continue to pull back and individual prices, individual stocks also continue to sell off even further. That's going to be first. And then Visa had a pretty steep sell-off, down close to 4% on Friday. They are reporting earnings next week. $205 is going to be that first level of support, all the way down to 190 for the company. We did have some like an inverse head and shoulders here, so left shoulder, head, and a right shoulder. Got a little bit of a breakout, but then it got faded all over, and we were back down and just starting to kind of get rejected by that 100 simple moving average. That's the white line you guys see on chart right here. All right, so let's see. Last but not least, we'll take a quick look at Coinbase. So Coinbase, very low valuation, big sell-off on Friday based on where Bitcoin was trading. $210 will now turn into a resistance for the company right now, and support next is going to be $187. So this is definitely on my buy list. So 187 is going to be that support, and like I said, the valuation is just so cheap right now for Coinbase that we can't really ignore it at these levels. So all right, so just last but not least, let's take a look at Snowflake. I haven't really gone over Snowflake in a long time. I think the valuation has definitely come down, but it still trades at pretty high price of sales. So we're trading at 82 times price to sales, price to free cash flow at over 1,000. So it's going to be a while before I actually consider Snowflake on a more serious standpoint, but support level at 263 right now. We're just kind of like validating that level all the way down to 210. Would not surprise me one bit if Snowflake ends up at 210 around those levels, previous support levels that we validated coming in from like March 21 and even further back from September 2020. So, all right, last Crowdstrike. This is the last stock. Crowdstrike 153 is going to be that next support level to watch, all the way down to 120. Valuation again remains a little bit rich for Crowdstrike, Zscaler, Fortinet, a lot of those cybersecurity stocks. So I definitely want to own at least a few cybersecurity companies, but just waiting for the right pricing and just the right valuation for those companies where I'm comfortable in terms of value. But anyway, thank you so much, you guys. Mara we have covered before, so you can go back and kind of check out that analysis. Upstart is also going down. Last stock is Upstart. So $87 is going to be that next support, all the way down to $49.50. Valuation definitely coming down quite a bit. And again, this is nothing but a valuation compression for a lot of these stocks, right? The price coming down is simply the valuation coming down. That's it, because the fundamentals have not changed. The company's still been doing really well. The growth, revenue, earnings, everything's been phenomenal for Zoom, for Upstart, for a lot of these companies. It's just the valuation that's coming down. So $87 is what I'm watching next, and would wait for Upstart to validate a support, kind of consolidate, exhaust all that selling pressure before I start a new position. But on my watch list for sure, we'll be watching it very closely. So thank you so much for you guys. I really appreciate it. 10 last stocks. But I really appreciate it. Hope you guys have a fantastic weekend and of course are ready for next week. Let me know if you have any questions. I'm going to go over our Discord and of course get back to everybody today. But thank you so much for being here. Really appreciate you guys. Make sure that you drop a like and subscribe if you're new to the channel, and also check out the Patreon and the Discord link down in the description if you want to be a part of our community, and of course join our money investing Discord. So thank you so much for being here, you guys. Really appreciate it. As always, happy investing. I'll see you guys in the next video.